Hey, what's up, YouTube? My name is Derek, and this is the easiest way to get funded: supply and demand. Let's get into it. First things first, 3MA. This is the only indicator besides a Sessions indicator I use to let me know the Asia highs, Asia lows, London highs, London lows, things like that. But the 3MA, I leave the stock colors yellow, orange, and red. Yellow being the smallest, orange being the middle, and then red being the 200. So right here, this is important. The first one is a 13, and it is an EMA. The second is 50, but it's an SMA. It has to be smooth. And then the final one is 200 EMA. And what we want is for price to be over or under those. If it's under, we're going short. All right. If it is over, we're going long. All right. So supply and demand. I'm not one of those guys who learns by people drawing on their charts. I much prefer actually seeing the candles and seeing what they're doing. So I'm just going to do that. However, if you guys prefer to draw on the charts, just let me know and I could do that in the next video. So right here, it's like 9:20. It's after the open. I'm looking at this right here on NASDAQ. This is back in August. So I'm just going over some examples. This isn't last week, or I'm not doing it in any order or anything like that. So right here at 9:20, we're getting ready for the open. As you can see, there is a nice supply setup right here. Right. Let's see what happens. It blasts right through it. So, invalid zone. Let's keep moving, okay? However, those wicks, they're respecting the 50 SMA, the 200 EMA, and then the 13 EMA as well. Just hanging out right there, which is what I like to see. It's respecting it, respecting order flow, continuing with the trend. Now at 9:35, technically, yeah, 9:35. Weird, because 9:30 was the open, big push up, rejection, and people could look at that as a liquidity grab if you trade ICT or smart money concepts. But at 9:35, a big push down. So once again, leaving behind a nice supply. All right, let's see what it does from here. Now, this is a tricky one. You could have taken this. I didn't, because it was way too close to open. Okay. Crazy candle, wicks right in and comes right back down, right, almost right to open of the candle, 5-minute candle. Now, like I said, you could have taken that, but obviously you could see my long short tool right here. I didn't take that one. I waited, and then another supply got left behind, right? And now I'm waiting just for it to return into my supply, and then from there breaking a candle, and then I get in. I'll explain that here in a second. Leave behind a nice fair value gap right here. I'll draw that out to you. Change the color. Let's just do purple. Purple might be a little too dark. Just do a light red. Right? That's good. So, according to a lot of people who trade supply and demand, a supplier demand that is left with a gap in front of it, or a fair value gap, imbalance, whatever you want to call it, is a high probability setup. A lot of smart money concept people or ICT people, they will take the trade based off of the fair value gap. You can do that, but you're leaving behind so much profit. However, there are times where it will go into the gap and take off without you. So I prefer it to go all the way back to the order block or supply and demand. Right here, you could have got in, and you could have won right there, right? It's not what I did though. Waited, and boom. This candle right here at 1025, it went right into the supply, no problem. Now from here, I'm waiting for it to break this candle to the downside. If it doesn't, the next candle that prints, I'm waiting for the following candle after that to break that downside. However, it did it right here. So you could do 1-to-1, and there's nothing wrong with 1-to-1s. 1-to-1s win all the time. I prefer to go for low hanging fruit, which would be the next swing low in this case. And that's exactly what I did. And boom, just like that. Almost 2.5 risk of reward and almost 57 points. So that's a huge win right there. Let's go check out another supply. This time it's on ES. All right, so let's check it out. We are at 820 right here. If you notice, money or the price is well above all three EMAs, especially the 200. So I would almost use the 200 as a target. But typically here, because we're above the EMAs, you would want to go up. All right. However, this is a counter trend trade. This isn't advisable, but you'll see it gets below these two EMAs. And that was confirmation for me that it's going to want to go down to the 200. I mean, that's insane. That's 830. That's a news candle though. So it's, I mean, it leaves behind a huge supply though, right? I shouldn't say huge supply, excuse me. That's a big engulfing candle though. And then a massive fair value gap, which what we were just talking about is a big high probability setup. All right, goes in and taps right into our supply, no problem. Now, once again, waiting for it to break this candle right here. And then we're going to get in shorts. Like I said, now it's respecting the EMAs and SMA, the 13 EMA and a 50 SMA. It is respecting it, no problem. Boom, got in at the break of the candle. Now, this is where it's, you got to use your discretion what you want to do. You could go 1-to-1 here, which this is a little over 1-to-1. This is a 1.3 risk reward. Now, 9.75 points on ES is pretty significant. Most of the time, you want to try to at least get 5, but double that, I mean, it's really good. However, you are risking 7.5 points. Like I said, and here's the thing too. This is low hanging fruit. This is a swing low. 9.75. Yeah, it's only 4.25, which isn't a bad win. I'm not, you don't want to be greedy, but I'm confident that it's going to go to the 200. So that's where I was trying to, I didn't have an actual stop here or take profit. I was watching it, waiting for it to get and react to that 200 EMA. Now here it does bounce back a little bit, but just a little bit above the 13 EMA and respecting the 50 SMA, which is the orange. And just like that, boom. That right there, I got out right off, reacting to the 200 EMA, and that's just a nice trade. That's just a nice trade. After it broke this low right here, I would have moved my stop to break even just to play it safe. but it was just reacting very nicely to the 13 EMA. And like I said, it wanted to go to the 200. All right. And then for the final example is going to be on gold. And this is going to be a nice one. This is like textbook. You just can't beat it. So right now we are over both EMAs and SMA. This is about 8:10 in the morning. Now, initially, this down closing candle right here could have been a zone. All right. That could have easily been a demand, but it blew through it at 8:30, which was a news candle. However, let's play. It left behind this demand. You could use the wick of this candle too. I would, with a little teeny fair value gap in there. So now we're just waiting for it to come back to the zone, which it happens right here. And what's nice about this one is look at that wick. I mean, huge rejection. Now you could have gotten in, and what Doyle likes to consider aggressively, you could have like waited for it to get back up to the 13 EMA and got in market order right there. But for sake of the video and just simplicity, you could wait for the break of the candle, which it does right there. And then in 5 minutes, 9:05, you have a 1-to-1, 8.9 points on gold. Massive win. Massive win. And here's the thing too. If you don't want to risk a lot, you could just go back up to the 13 EMA. And I mean, that's a almost 2 3/4 risk to reward ratio, which is fantastic. But if you use micros and you don't mind only doing a few contracts with micros, you could have a bigger stop loss. But that wick and reaction off of the 13 is, I mean, this whole setup is just, it doesn't get any better. This is it. And gold has been really giving crazy setups lately. So if you have any questions, if you want to see more of this, like I said before in my past videos, I'm pretty new to this, so please bear with me. I have a lot of ums and ahs, but if you have any questions, please feel free to leave them in the comments. And I'm just gonna keep making supply and demand videos because it's what got me funded. This is the easiest way to get funded, hands down. If you liked the video, please leave a comment, like, and consider subscribing. Appreciate you so much. Have a good day.